So new subsectors of fintech are beginning to gain significant traction, and one of them is neobanking. As the population of Africa continues to grow, younger people are there, they're more tech savvy, they're more connected, and they want fast and non-traditional ways of getting their money or transferring their money. Well, allow me to introduce you to our next panel, which is called The Future of Banking. And I'll also be moderating this one today. And I gave you that heads up that you'll be seeing a lot of me. Please allow me to introduce you and welcome on stage Tosin Eniolorunda, TeamApt Chief Executive Officer, Mounir Nakhla, MNT Halan, Co-founder and CEO, Oliver O'Brien, Mukuru Group, he's the Group Executive Head of Strategy and Business Development, and Jacques Marco, Access Pay, he's the founder and CEO. Is anyone here? Hi, Oliver. Jacques is here. I don't know if, because we actually did a shift in the agenda where we pushed that panel ahead. Hi, how are you? Yalla bina. Let's go. Just missing Tosin. Is Tosin here? Thank you. So until Tosin joins us, I'd like to kickstart that conversation with some quick introductions. Maybe everyone here could take a few minutes to introduce not just themselves, their companies, who they're representing, but also how about you give us a very quick news update of what's going on in your company. This way we can contextualize something a bit more recent and worthy of the attention of everyone. Mounir, in zone.
Hello, everyone. My name is Mounir Nakhla. I founded MNT Halan. MNT Halan is a company that does digital banking and digital banking services for unbanked and underbanked in Egypt. We have north of 1 million users. We do lending, payments, buy now, pay later. And what we're doing is creating an ecosystem for customers and merchants, providing multiple touch points for them. We have a loan book north of $400 million. And we've served more than 4 million people since inception. Thank you.
Anything newsworthy about MNT Halan? Did you announce like a big round recently?
So there are lots of exciting news, whether in growth in verticals, rolling out new technologies, accessing new markets, and nothing to mention beyond what's in the news.
Great. And Oliver?
Hi, everyone. So I'm Oliver O'Brien. I head up business development and strategy for Mukuru. For those of you who don't know, Mukuru is a financial services platform predominantly focused on financial services in Africa. We have our main product and our leading product, which is cross-border money transfer, primarily focused on low-value sends between countries in Southern Africa, rapidly spreading across the country or continent. We are now facilitating transfers to and from about 70 countries, making up about over 200 remittance corridors. And we've done what I think is quite a clever thing, which is utilize basic tech like USSD, SMS, phone call, to meet customers where they are in this journey from a totally informal sector, non-digital, cash-heavy, into this far more formalized, digitized economy. We've seen that people are either totally unconnected, and we help them on their journey to become more and more so connected and actually access the financial services that you and I take for granted. So we've launched a lightweight banking product, a wallet, various insurance products, and there's a lot more exciting stuff coming up in our future.
Thank you. How about you, Jacques?
Hi. I'm Jacques. I'm new to this. So I'm building Access Pay, which is a payments platform to increase accessibility to payments and financial tools. And prior to that, I worked with Mounir, actually, where he was our seed investor in Rasidi, Egypt's first independent open loop wallet. And I'm happy to be with you guys.
Thank you. And we're joined by Tosin. He's the Chief Executive Officer of TeamApt. And we just kickstarted the conversation by just asking you to introduce yourself, your company, and even give us any business news or just contextualize everything with what's happening today.
Thank you. My name is Tosin. I'm the founder and CEO of TeamApt. We are a card acceptance network in Nigeria, powering 130,000 plus merchants and agents in accepting transactions for goods, services, and cash, and also a digital bank. So you could say we have a two-sided play on both issuing and acquiring side. And I'm excited to be here. I think this is one of the next major frontiers for expansion in the continent, and it's nice to be here. Yeah.
It's a pleasure as well. Well, the name of the panel is The Future of Banking, and we don't really have any bankers here or banks represented. So, dear banks who are here watching us, we are not discussing the future of banks, but we're actually trying to figure out what are the new trends that we need to capitalize on. We've noticed that a lot of traditional banks are creating their own digital banks, sometimes avoiding using the same name of the bank. We're thinking of banks that ventured or invested in digital banks, removing their actual brand name just to engage with a new community that wanted that big shift. So just to kickstart the conversation, what are the alternative, and I think I'll start with you, Tosin. You provide a lot of agency banking services in Nigeria, where your ambitions is to bank 350 million Africans. And we know that Nigeria is 200 million people strong. So where and how are you planning this ambition to be a reality? And are you going to relate or are you going to utilize some tools that are tech tools, or are you going to really capitalize on retail footprint and traditional footprint?
I think anybody who's going to distribute financial products in Africa will need to use a combination of both. I don't think a pure online approach will scale to most demographics, and I also think a pure offline approach is not taking advantage of the economies of scale that technology gives. And what kind of approach can be? I mean, there are many parallels currently. The fundamental thing to think through is, what do customers want? And these things that customers want are not being met by the incumbents. You can always draw parallels in what the industry looks like. Credit is one major drive. There are credit-led digital banking providers or banking providers. Another one is convenience, where that's probably one of the reasons why mobile money networks or wallets scale, because they provide convenience in terms of onboarding, P2P transfers, more than what the incumbent customers will do. Another approach also is insurance-led, where you have some level of protection for customers. But ultimately, what you always want to do is do a combination of one or two of all, where you have something that's convenient and meets certain consumer needs. I think another one, which is related to convenience, is access. Consumers also want digital bank for many reasons. I mean, of course, I'm learning that in Egypt there are dynamics, but all in all, generally, it's kind of more convenient to transact digitally. But there are cultural norms that you need to get over. What we've seen in Nigeria is the average person would rather do digital because of theft of cash, because of access to credit, and because of the cost of carrying cash around. So if you can provide a tech-driven solution that gives consumers access to this problem, solve convenience problem, access to credit and insurance, and you now distribute it, that's where physical comes. You can't distribute just through apps, because decision-making for consumers in emerging markets is done through word of mouth. The reason why they will trust you is because other people say that you are good. It's not because of what they read online on the internet. So that's why product gets to critical mass, because you get enough word of mouth that will now start making the product start running by itself. So, and word of mouth is generally gotten when people talk to each other, so that's why you need physical. So it's always going to be a combination of both, and the product to push is what consumers want, which is convenience, access, as well as credit.
Thank you.
And low fees.
And low fees.
Low fees, yeah.
I'll move to you, Mounir. Tell us more how you envision the future of banking. Do you see banks becoming more partnership-driven with fintechs, and especially in these times where fintech is growing very fast and banks are trying to grasp the dialogue and come back to the scene with innovative ideas? Either they start investing in these companies, or do you think that there will be eventually some sort of merger between the thoughts, and just thinking of picking your brain on this?
So thinking about it, what I would do is I would take a step back and take a look at what's happening in the world. I think what's happening in the world is we're undergoing a digital revolution. Mobile phones are transforming countries. Mobile phones are transforming how people live and how people behave. And because there's a change in the behavior of the human being, he's expecting instant gratification. And with instant gratification, when someone sends a friend a WhatsApp and he's late for 7 seconds, the other guy is pissed off. And this very high level of expectation is not only affecting the expectations of the consumers on their social activity, but very much so on their banking activities. So I think what's happening now is the expectation of the consumer is going up. So this is one point to take into consideration. So what is the consumer expecting? Instant payment, instant loan, instant. So frictionless transactions, conveniently done, happy transactions with nice colors, nice experience. So experience is also a very important thing. Now, looking at our area of focus and concentration, which is unbanked and underbanked consumers, communities, economies. And what we're seeing there is that the mobile phone is the best method for this individual to perform his banking services. Banking services, if we segment them into 3 main sections, you've got lending, so they need to borrow money, whether for consumption or to grow their businesses. And this is something more and more they're able to do through their mobile phone. 2, deposits and savings schemes in general. And whether in many, many countries in Africa and in the world, people now more and more are able to save on mobile phones. In Egypt, they're not able to save, but there is more and more floats on mobile phones, on digital wallets, and this is increasing. And banks are a strong partner in this segment, and also in the lending segment. And the third one is transactions. And with transactions, we're talking about payments, and payments on both ends. So as an issuer or an acceptance, payments more and more is going to be done through easy, convenient, frictionless methods such as mobile phones. So we're seeing that ultimately the mobile phone will be a big, big driver for change. Moreover, there is a new technology that is sweeping the world, which is the blockchain technology. And here, I'm not talking about cryptocurrencies. I'm just talking about blockchain, simple blockchain, yes. NFTs. And with blockchain, more and more banks will be able to communicate with one another through private blockchains, what this will do is it's going to affect the whole industry of settling payments between issuing and acquiring banks. So if you ask me how we see the world going forward, we see that more and more people will be, more and more decisions will be data-driven decisions. Institutions have to be able to scale. They have to be secure. You have to give this security for yourself and for your customers. And with scale, you will need very solid machine learning and automated credit decisions. So with scale, less you'll have people making decisions and more machines making decisions. And so this is where we see the future of banking. The role of, it's important also to note that in a country like Egypt, what we're also seeing is happening is banks are more and more a partner to fintechs, and they're working very closely hand in hand. The Central Bank of Egypt is extremely supportive of this revolution, endorsing it and promoting it. So I think Egypt is a fantastic place to grow that, especially with a 100 million population.
Thank you, Mounir. On this note, I was about to maybe take some of your thoughts on the instant payment and relate it again to Jacques. Perhaps you can give us an idea, since you're now building Access Pay, which means that you're still building it. Where do you see the impact on the existence of something like Access Pay, the speed of your go-to-market, given that the central bank just announced its IPN, instant payment network regulations?
Definitely. So the central bank has been very supportive of fintechs with multiple regulations that were issued recently, right? And the IPN network is a very good catalyst to also bring together the unbanked and the banked, right? So previously, the unbanked population was either in cash or on wallets, and the bank's accounts were completely two different worlds, right? And IPN now with that Misa Pay network, where all banks and fintechs can talk together, has led to a strong connector that will reduce the movement of cash in the market, right? Today, through an IPN compliant app, customers will be easily access their customer's bank account, check their balance, and also send money, whether it's to a mobile wallet, whether it's a Misa card or another bank account, which will really change how banking happens today, right? We'll no longer need to open 5 different internet banking websites, right, or mobile banking apps, and you can have one application that really brings together all of your different bank accounts, and you can easily move money across bank accounts and from banks to the unbanked as well.
So easy moving is something that's just instant moving of money and transfers, which is exactly what Mukuru is doing with the remittances cross-border in Africa. How are you mitigating this with different countries, given that remittances are the primary source of funding in Africa from outside Africa, given a lot of, even it surpassed trade, I believe, in terms of inflows of foreign investments?
Yeah, certainly in some countries that's definitely true. I think we've sort of taken the view of, what do our customers need? And the initial sort of answer to that question was, I need to put $50 back on my family's table tonight so they can eat food, or pay for an emergency medical bill or procedure. Most of our customers were sending money back home, in cash or using a Hawala type system, fraught with risks that I'm sure we all know about. And we said, well, okay, these customers, they don't trust banks. They need that instant, reliable, secure service. They might have a 3310. How do we meet that need? And so, yeah, I think the ability for us to provide, instant access to creating and paying for a transaction, getting that cash home, because there's a collection point that we've set up. We have about 320,000 cash payment in and out locations around sub-Saharan Africa, as well as the sort of digital channels for those who would prefer to transact in that way. By giving people choice in an instant, reliable, secure, safe way, highly convenient via either USSD or a smartphone app, I think you can meet those needs rapidly. And then on top of that, provide additional products and services. Once you've got that trust in your service, why not have a bank account with Mukuru? Why not insure with us?
But cross-border is quite a nightmare for most people, very expensive, very, very lengthy. Even if you solve it with technology, there's still the fin of the tech part that is missing. So how are you managing these cross-border rails in terms of treasury, for example? Are these coming from a partnership driven with a local bank or someone that, I'm assuming, with a very cash-rich balance?
Sure, so the answer is both. We've partnered with over 80 partners around Africa, mostly banks, retailers, MNOs, additional aggregators, and we've also set up our own operations. We've got 41 or 42 licenses across 13 different African countries, as well as the UK. And on the back of those partnerships, our own networks, and our own funding, we've been able to facilitate that sort of pre-funded instant cash and digital transactions for our remittance business. On top of that, I mean, that's just the person-to-person remittance business, right? The ability for us to then facilitate transactions between person to person and then person to business or business to person. So allowing organizations, donor funders to use our rails for those types of payments, to find people in those countries, to get food on the table in instances where folks have lost their ability to earn money, and we can provide that data because we can see that in our remittance data. We've been able to flex our networks, our licenses, and our partnerships to better serve the people of Africa.
Thank you. Tosin, you launched... Sorry, go ahead.
So I want to confirm that peer-to-peer transfers, whether cross-border or within a certain nation, cross geographies, picks up very, very quickly. So our experience with the mobile money and with the mobile wallet is that in a span of a few months, we have millions of dollars moving hands, cross governorates, cross geographies from one person to another, and it's gaining incredible traction. So it's definitely a use case that people need.
Massive, and a very interesting sort of thing that's happened for us recently is, we all know this, every single African country is totally different and has a totally different sort of set of interesting political and economic things. And what we've seen in one of the countries we operate in is our domestic money transfer product has totally spiked because of the use and the needs of the customers for a simple cash-in, cash-out mechanism. And so that, as a sort of what we would probably see as quite archaic, someone walks up to a booth, hands in cash, a message goes to the recipient walks to another booth. We happen to have these booths all over that particular country, and they're in nice, convenient locations. But because the rest of the country isn't able to operate in a digital, or doesn't rely on those digital rails in Zimbabwe, for example, this domestic money transfer product has scaled rapidly.
So cash in, cash out is key. I think what Egypt has, I don't know if it exists in Zimbabwe, is that you can cash in, cash out through ATMs. Because ultimately there is a bank at the back end of the wallet and even a card. So there's a bank and you are on the network, so you can cash in, cash out from an ATM, as well as aggregators and cash in, cash out points.
For sure.
Yeah. And that's exactly what TeamApt actually is doing with Money Mobile. So this is one of your products, right?
Yes, that's correct.
So can you please give us more information about Money Mobile? I'm sorry to cut you guys from there, given that we're all cutting the panels short. But this is exactly what one of your products is solving. So Tosin, please, Money Mobile, can you tell the audience?
So I think the major reason for cash in and cash out, the major reason for cash in and cash out is because cash is kind of inconvenient. Well, digital is more convenient than cash. Let's put it like that. So some people will not consider cash inconvenient, but there's certain amount of physical cash that's inconvenient. Different countries have different amounts, but once it starts getting handful, it's not convenient. But so at those thresholds, digital payments is better. But for certain thresholds, cash is better because you just pay and you go. And that's why in places like UK, they invented contactless. At that point, you tap and go. At that moment, contactless becomes easier than cash. Now, so it's all about convenience. Let's reason all the way from up. Now, what has happened in Nigeria is Nigeria has a higher rate of theft than Egypt. Nigeria does not have as much, government looking into your bank accounts. So certain thresholds, people prefer to keep it in their bank account. And that's now enabled a certain use case of where I keep most of my money in the bank and I withdraw on demand. Now, before cash in, cash out networks became exploded, there used to be ATMs, and ATMs had tons of queues. So when networks started coming up, people did not trust them, and COVID came, and you didn't have a choice. And from then, people discovered it and realized it's actually much more convenient than ATMs because it's just beside your house where you live or you work. You pay higher, but when you factor in the time, because of the queues in the ATMs and the cost of the ATM fees also, it's probably more convenient for you to use a cash out agent. However, the major driver, counterintuitively, is digitalization. You will not have cash in, cash out networks if people don't primarily store their value in bank accounts or wallets. Now, that's why it's exciting now for Egypt as IPN comes, because IPN it's removing one of the friction of digitalization, which is time to receiving value. Between 1 to 3 days it is, I think, currently, I believe. So by the time you are able to send money to any peer, anytime you want, and it gets there instantly, the friction that people have in their heads in keeping money as cash starts reducing a little bit because one component is gone, which is how quickly can I access this money or use it for what I want. So that use case will start driving more digitalization, which will include cash in, cash out. However, there are some things to consider. One is Egypt has more ATMs than Nigeria, and probably less queues, and also not as expensive. ATM have fees in Nigeria. Right now, I don't think there's much fees. So when you consider that pricing and you consider it together with the amount that people will need to pay in transport and time, and consider that versus the interchange fees that you need to pay, together with the markups agents will need to charge on that, people will always make decisions that is cheaper for them and more convenient for them. But there's an opportunity if the pricing is right, and IPN will only improve it. I mean, all in all, cash in, cash out is a vestige of digitalization. It's counterintuitive.
Yeah, and we're always very concerned about the bankability and the serving of the unbanked and the underbanked. Sometimes it's a matter of adoption, but also it's a matter of access, notably in the lending business when it's an informal or in the gray area business. So who are the enablers that you solicit to support you in rallying these businesses to come into the formal sector and start actually transacting through a regulated or semi-regulated payment rail, for example? I believe Mounir and maybe even Jacques after Mounir can tap onto this.
So I want to agree that there's a lot of money saved in time cost by digital transfers. And we're seeing this with our installments. So if a client has a £1,000 installment, he needs to go to the branch and pay £1,000. Instead, it's going to take him £5–10 to get a rickshaw to go to the branch. It's going to take him an hour back and forth. And he would much rather pay a nominal amount and transfer it from the mobile phone and reduce his loan balance instantly. So for sure this is happening. Now, in terms of regulation and transparency, I think the world economy is trying to eliminate cash from society. And the main reason for that is transparency. So, and it's transparency on both ends, right? It's transparency on government bodies, but even the customer can know what fees are taken from him in a transparent way, what's being happening. So transparency, both ends works well for the cash in, cash out is very, very interesting and very, very important in a transition phase. So the example you mentioned, the UK, I don't believe cash in and cash out is as important as Nigeria or Egypt because there's less reliance on cash. Formal channels, regulated bodies, so most of the lenders and payment companies in Egypt are regulated bodies. And most of the payment goes through regulated platforms. So everyone paying from our wallet is paying through a regulated channel. So we are a regulated company by both FRA in some services and CBE in others. So regulation, most of the entities we deal with are regulated entities.
But the informal sector that you are trying to engage and grasp and maybe penetrate, how do you justify this coming into a regulated?
So it's KYC. So in order to onboard them into a digital regulated channel, we need to KYC them. And the payment infrastructure in Egypt, all the fintechs have banks at their back end. So we're performing services on behalf of banks. Even the IPN, by definition, IPN is a service for banked customers, not unbanked customers. It's banking the unbanked. The card is a bank account. And what the IPN does is it enables you to transfer money and pay bills and from one bank account to another or from one card to another. But the card, it has a bank at the end. So the way it's been designed in Egypt gives the banks a very important role, and very honestly, they're all very supportive. Yeah. So KYC, so this is the point. We need to KYC the customers to bring them in. Currently, what happens is KYC, you need to have ink on paper. And this is one of the things, once we can overcome ink on paper and we can do digital KYC.
Digital signature as well, that will come in.
And obviously it needs to be approved by regulatory bodies, but even more so for lending, the day it is approved by courts, that takes you to a very, very different level of digitization.
The scale is incredible.
The scale is
yes. And access
I wanted to add to what he said, especially on the transition phase. Sorry.
Yeah, that's fine.
Especially in transition phase.
You tell him, sorry. It's fine.
Yeah. So, and that's very correct. So what's going to happen is the moment the velocity of money grows, right, money can move faster. People who have inhibitions in their mind because of time to which they can get their money on settlement basis or P2B, that inhibition goes away and is left with other inhibitions that they have. This encourages people to become more digital. And in that phase, you need them to, you can't just change people from what they know suddenly to some new world. You need to have a phase. Now, the exciting thing about what cash out and cash in does is it's transition. But in reality, it's a card acquiring network. So what it is in reality is a merchant network. You now give rise to these new classes of merchants who would help you transition and sell cash. But this class of merchants can still decide to sell goods and services. So who are these guys? Typical merchants that you see on the street who also generate cash right now. They can decide to accept your card or your wallet for you to pay for a good in their shop. But they know that one of the major reasons that people still want because of habits is cash, so they also sell cash. So the way to see it is more or less like a merchant acquiring network for emerging markets. That merchants that also sell cash in addition to goods and service. So what that will start doing essentially is people will now start keeping ATMs, and over time, people will now realize, I don't even need this cash face for me to do my goods and service. I can simply use my card, my wallet, or any other token I use. And that's how emerging markets will transition to full digitalization.
Thank you, Tosin. I would go for Jacques now. If you can tell us how do you aim in launching Access Pay, given also the current circumstances with the IPN being launched? What are your ambitions in solving the future pains of banking? Because now you're actually building for a future method. So.
We're still quite early stage, right? So we're still figuring out a lot of the products we want to roll out to market. But back to the cash in, cash out, right? And there's a big trust and educational barrier that we need to get past for digital adoption to scale, right? Trusting that money that's on your phone is actually cash you can hold in hand. So definitely all of these cash in, cash out networks, whether it's Asian networks or ATMs, are critical early on, right? Because once you disperse money onto a wallet, whatever the channel is, remittance, loans, or salaries, you need to access this money, right? So once you have a lot of places where you can quickly get it into cash in hands, it will increase adoption going forward, right? So it's quite counterintuitive where you want to get people to turn it into cash first, because then they trust you, they trust your product, and then longer term, they'll keep it on their phones, whether it's a wallet, it's a card, they'll keep it on with you on your platform. And then the second part is the acceptance side of payments, right? When it becomes quite easy to pay with an app or to pay with a card, then people will no longer need to take it out to cash, right? So they'll trust you to keep your cash with you, and then they'll be able to use your product. But it's a two-step approach that needs to take time, given that we're, or at least we're looking at the unbanked as well. And a lot of them it's their first interactions with the financial system, right? The smartphone is a good way because they've already been using different apps, different channels, whether it's WhatsApp, Facebook. They're quite familiar with their phone. Cards are quite new to a certain segment. But it takes time, right? And it's about building that trust between you as a platform and your customers and whoever works with you.
And the trust is gained by the brand that will interface with the customer, be it backed by a bank or not. Sometimes banks are being conservative by partnering with fintechs because they are afraid that the fintech will be the interface and eventually take on that loyalty and steal this. And I believe I've learned that lesson in one of our in the article that our CTO had written about the trust and how banks are really holding on to that last breath because they just still want to keep the customer with them. They still want to keep the customer, the interface is still with them. And I'll end this panel perhaps with Oliver's take on this when it comes to, you were the one who said in the beginning that for remittances, sorry, I pronounced it wrong. There's an element of trust, but what makes the person trust a new fintech and not a reliable bank, for example, when they come to receive their money, or even the sender that is abroad, usually in a Western country, that wants to send money to their family in Ghana or anywhere?
I think, I mean, in our instance, it's a track record of having done this for 9 million customers over the years, and so they tell their friends the first thing you do when you get into a country is get yourself banked or get yourself a way to earn money and get money, and then you, as a migrant worker, you probably want to send a bit of money home, put some food on the table. And so you ask your friends, right? And if you have provided a simple to access service in a channel of their choice, whether that's USSD or WhatsApp or a smartphone app, and you've made it easy for them to actually go and then collect their money, whether they prefer to get it in a digital bank account or in cash, just outside their house, outside of Checheche in Zim or wherever it might be, you've immediately generated that trust. On top of that, you can then start offering additional products and services in a similar way. I think you actually summarized the sort of how you build trust method perfectly.
Yeah.
And having that cash in, cash out network is your initial sort of bank. I mean, we have about 1,000 of these, what do you call it? 1 meter by 1 meter sort of booths with a person inside with a little stack of cash and a smartphone. They are spread out, across a lot of the sort of southern African countries, and they act as what we call the sort of bank branch of the future. There's a person in there that you can go to when you have a problem with either your remittance or your banking with us or whatever it might be. Over time, though, you probably don't need to use that because you now trust us with your money,
Okay.
and you trust us by keeping your money with us.
So it's with practice
It's just, I suppose, building
and
trust
proof.
over time.
Yes, yes.
Yeah.
And to
And
make
we-
sure that they can take the money out.
Exactly.
This is what we've seen. So
Crucial,
we've
right?
seen with our first disbursements, people rush, get all the money out. Next time, they get 99%
Half of
of
it,
the money
yes.
out. Then 98, 97, and now they're leaving
They're saving it inside in the digital
they're leaving
way.
more and more money on the
Yes.
digital platforms.
And I think some banks will get this right. There are some that are already quite progressive, but I mean fintechs will fill the gaps in whichever countries banks aren't stepping up into that space to provide that quality.
In a way, the largest fintech company in Africa is an agency network, right? Safaricom, Vodafone. It's essentially a model that's proven trusted, and it's a combination of offline and online. It's a digital product that has people offline, tons of people. Initially, people get cash, but now leave money in the wallets, and these agents have act as customer support. It's a model that is known. Assuming even Europe, many years back, does not have the model that made it as advanced as it is, and he wanted to reinvent banking, is likely going to be a mom and pop shop model than traditional bank branches. So it's literally, it's access, cheap access to customer support, cheap access to the cash intermediary, and it is what it is. So I kind of think that in Nigeria, because that's what we're building also, we're building a digital bank, layering it on top of our agent and merchant network. You should be able to get a card at any of such locations. You can download the app. It's full digital. You're a digital customer, awesome. But you're not digital, you can also go to these agents. And I think it's also a model that should scale in other major markets.
Excellent. I think we're starting to be solicited to leave, and I'm still going to remain here to announce the next panel. So thank you very much for being with us, and thank you, panelists.
Thank you.
Thank you for this great conversations supported by actually MNT Halan.